The most important Federal Reserve decision of 18th of September is just ahead of us. Are we gonna have the first series of cuts that we've been awaiting for years? And yesterday, Wall Street Journal came up with an article written obviously by Nick Timiraos, one of the Fed insiders, about Fed starting to cut severely with a series of cuts. Several years of hard work trying to tame inflation, it's all gone, and we're gonna have a severe, prolonged. Well, let's look into those in more details. My name is Russ, and today's short and concise video, everything you need to know. Let's go. Good morning, good afternoon, everyone. Long time no see. My name is Russ, for those who forgot during my vacations. So, super important. I am shocked, but I'm not surprised at all, because the leaked article or the leaked information in the Wall Street Journal article clearly indicates us that Federal Reserve is very assertive about the cuts. Let's see. And just to give you a little bit of context, we were expecting the CPI data to come this week, and it came hotter than expected. It was significantly above the forecast. Well, 0.1 basis points, but what I mean by significantly, that a PPI print is also both month over month and core came above the forecast. So how far with those hitting inflation and inability to reach anything close to 2%, now we start to see the reaction from the Fed, that Atlantis Bostic coming out to the journalists and saying that, we don't really actually have to wait for 2%. And most interesting, now we have this mentioned Wall Street Journal article coming out yesterday. And what do we see? We were waiting for some Fed response to the high CPI print. And, we were supposed to be more cautious because macro traders started to price 80+% probability of 25 basis points instead of 50 basis points. And now Fed just come out with information that they preview the series of cuts despite the uptick in inflation. Does it actually make sense at all? All the hard work on inflation, a couple of years of saying how important is it, it is all, thrown to the wind. Well, I really kind of don't get the Fed, but I understand those decisions are very political, and Fed is just trying to maintain the economy where we have yield curve uninverting right now until elections. They just trying to manually bring it at their digestible outlook towards the 4th of November. And one of the indicators I'm looking at is the regional bank ETF. It's a CAR-RE, something that we've been observing in the past, but not that often. So maybe it's good that we have a quick look on it. You see, it is having hard time. It is having hard time to maintain that uptrend, but it clearly indicates us that some liquidity by Fed has been provided to avoid the concerns that we had in the past with the regional banks running the bankruptcies and defaults. So where there's extra liquidity that is allowing the regional banks to look a little bit better than they look in reality, where does it go? Well, it leaks towards commodities. And this is something I'd really like to focus here. People have been asking me, how is silver, palladium, gold, and others gonna behave from here? And you guys can see we reach our downside targets that have been indicated in the Telegram group. You can see gold was about to bottom, as I said, between 2400, 2500, and then raise to 26. GDX, we were expecting the bottom between 36 or 34.5, and silver is to bottom around 27.7. Now coming back to the charts, I see, wow, surprise, 27.7 was actually the bottom. So let's maybe have a look. 27.7 was the bottom, and then my target of $30 has been reached. Now looking at another chart, which is gold, similar picture. The bottom 2470, as said, 14 attempts to break through 2500, and here we are almost at 26 100. When it comes to GDX, we got front running my target by 20 cents, 22 cents. I said 36.22, and here we are gonna retest right now the upper side of that ascending channel. So as you can see, guys, I am doing it all completely for free for the newsletter subscribers. It is quite accurate, I would say. I've been doing it for multiple years, so if you are in those markets and not subscribed, I think you're doing yourself a huge disservice. All you need to do is subscribe to Nick's newsletter, which is less than $1 a day or something like $30 a month. I keep the link in the description down below. So then I was emphasizing this is just the baseline for the most parabolic run that we're gonna have in silver miners. That happens normally 2 times in a long debt cycle, which takes more than 100 years. So you have this opportunity, not every generation, you have this opportunity once in 2 generations. So if you're saving your time and preserving yourself from this opportunity, as I said, I think you're doing yourself a huge disservice. Please prioritize where you would like to focus. Crypto, altcoins, yes, great, but this is not the place where you're gonna make parabolic returns until I notify you otherwise. So there is an opportunity. We're gonna have an amazing Q4 in alts, but it's not yet there. So focus where your energy is having the highest return on investment. So focus on commodities for the reason I indicated previously. Fed is trying to put the patches on the economy, which is not doing well, but smart money managers are understanding the place they want to be right now is commodities. So those money are leaking into the asset classes which are much more preferable right now. And what I mean by much more preferable, I'm looking at gold to silver ratio. We were super lucky. Gold to silver ratio gave us one more retest, almost of 90. And now with this double top, we're gonna start our descending move towards, I would say, 48 or around 52 gold to silver ratio. And what it means for silver, well, for silver it means maybe a slight correction here. I don't think it's actually going to happen today. I think we're first going to liquidate all that shorts. Maybe we're going to retest this breakout line, and then I clearly see us shooting up towards mid 30s. When I'm looking at junior silver miners to silver, I also see that we are just starting our move. We are into the accumulation range, right? And so it's much more lucrative, much more positive to enter the junior miners closer to support. If you remember, multiple times I indicated that despite most of the traders are made in the bull runs where we break through resistances, normally you sell at resistance and you buy at support. You don't expect breakdown to happen all the time. Markets by their nature are ranging 80% of time. I keep repeating that because some people are still asking me in the comments in our Telegram group, we are about to lose the support, should I sell? I was like, no, that's exactly where you buy. You don't sell at support, you buy at support, you add to your position at support. Despite you're red, it's okay, but you sell, you take profit at resistance. So where do we have the resistance? Well, we have the resistance here, but this something indicates to me that if we continue like that with silver, this might be the time that first, second, third, fourth attempt to break through this resistance. If you're looking on a weekly, it's nothing. It's just bringing us back to the values of May 23. In my opinion, we will be somewhere at 0.6 in a matter of few months from here. So please don't sell your miners. Don't get kicked out from the position. It is important that you are assigned, you are allocated, and you don't miss on these green candles. This 8% green candle as of yesterday, that green candle was counted from the value of a previous day, but if you just see the entirety of the candle, that is much above 14%. That's what you can do intraday. Where else on earth you would have the intraday of 10+% return in a TradFi market? I think this is an amazing opportunity, and that's why I keep repeating. Sorry for repeating myself, but some people clearly don't get it because they're getting too stressed too quickly. They allocate in miners and they want to yield 3x return in 1 month. No, the 3x return would come For sure, I'm 98% sure, but they need to be awaited. For a few months from now, the Fed didn't even start to pivot, and market is already anticipating those moves. So please be patient and please stay assigned. I received another comment in the Telegram group of someone asking me, Russ, but the targets have been reached. Shall we take profits? Okay, good question. Let's have a look. First of all, I'd like to point out that the COT data still indicates us that the banks are in the huge short position, probably the biggest short position they had since years. But these shorts are declining with silver prices going up. What does that mean? Well, it means that they are being squeezed, most probably by Asian markets. In Shanghai, in order to trade silver, you need to deposit the silver bullion. So that's completely different market that is harder, much harder to be affected by the derivatives, by the paper trading. And looking at the chart right now, I see two scenarios. Of course, it's all going to depend on gold. So if gold starts to correct because the sentiment is extremely bullish, and which I don't like, silver can correct too. But please keep in mind that gold to silver ratio is in our favor. So I still would consider as an option A as my priority outlook and an opportunity for silver to first of all go and reclaim the level of 31.7. So 31.7 would give me the confidence that we are moving up from here. 31.7 would be the reclaim of a previous high, and if we are able to reclaim that level, then I see $33 at least next. 33.5. Let's put 33 for simplicity. That's how I would see something like that. If, however, we are trying to break here but not accepting above, then we might need to retest once again that trend line. Not fully. I think we're gonna get front run here because still a lot of people are not allocated. I think the sentiment is not as good as it could have been in silver. It's much worse than in gold. People are still sleeping on silver. I spoke to a few billionaires. Being in California, everyone is trying to get in, but like most of the people kind of missed it out. So 28, I would say 27.5 are two beats that I would like to step in. If you are sleeping on silver, if you missed all my videos, if you are for certain reason not in a position, we're lacking cash, liquidity, whatever the reason is, not judging you, just giving you the point, 27.5, 28, that's where you enter if you're lucky, if it's given. I'm not promising that. And then we're gonna make one more attempt to break through. When it comes to gold, I don't think it's much lucrative as silver to trade gold in here, but I still feel that this market is very much driven by gold. Silver market is of course dependent, so I'm observing it too for your safety and for your ease of decision making. So first of all, I think gold here is due to hit 2600 just as a psychological level. Maybe there will be a little bit of selling prior to that level. Let's mark it here. What I think can happen next, I think next will be two options. Either we accept the 2600s and then the next target will be 2700. So something like that will be my point, option A. My option B, and please keep in mind before we go to option B, option A and move to 2700 would also start the spillover effect on gold to silver ratio, which gonna go down all the way from 90 to 70s or so in this first move. So for gold to go somewhat like 4% up, it will probably also bring the move in silver, which is roughly about 30%. Just simply divide 90 on 70 and multiply on 1,04. You would see what I mean. And 30% in silver from here, we are talking roughly around already late 30s, so close to 40 USD per the troy ounce of silver. So very lucrative moves. If scenario A is in place, what can happen negatively? Well, this sentiment in gold, as I said, is too bullish for my liking. I'm not particularly happy that everyone is long, and the main danger can come here, surprise, surprise, from strengthening dollar. Right now, it looks not so strong, but maybe if we are able to accept here my yellow line, by the way, those lines are here since years, nothing changed. That's kind of indicating for me that they will be respected at this time as well. So we might actually come to those fair value gap, to those zone of inefficiency, all the way to my previous yellow line of 102.6. And of course, acceleration in dollar like that would be dangerous for a gold market. So where it can bring gold? Well, I would say it can bring gold. The worst scenario, 2460. 2460. Let's put this red line here so it's easier to see for you. And this current scenario in option B would be a correction from those levels all the way to 2460. I mark our Latin letter B here. So yeah, you can evaluate from here. Of course, for those who is subscribe to my Telegram, I'm gonna do the job for you. You just need to follow, because I think I significantly improve on my updates both in crypto and in TradFi. They're coming quite regularly. So for those, of course, not gonna leave anyone alone. It's just you're gonna have an access to me a little bit more rare, like once or twice a week, depending on our sync with Nick. You would still have an access to me, and I'll try to update you once a week on what happens in the world of silver. Now, when it comes to miners, some have already accelerated significantly. Some are still lagging a little bit. I clearly like MGG here, because yesterday, despite such a huge move, you know, juniors, they're always moving later. As I told you, consider them as L3s. So L1s are running quickly. Those are, for example, let's compare Bitcoin to gold. And in this case, Ethereum would be silver. So on top of Ethereum, you have different L2s and L3s. Consider them being major silver miners and junior silver miners. So treat this Minarium Gold as your L3, so the liquidity would start flowing there slightly later. So you can see the bigger guys like First Majestic, they had much bigger moves yesterday. And that's in your favor, because if you miss that move yesterday, you can still allocate yourself in a junior. So First Majestic did roughly 12%, but Minarium Gold only did 4 to 5. So if you miss that move, you can still consider allocating, adding here if you're lucky. I think within a matter of several weeks, actually maybe 1 or 2 weeks, I would say, not several, but a few, we're gonna break through this resistance line, and then we're gonna act very much like Pantera. What happened to Pantera here? We broke through this resistance line, and immediate move within a day or two of how much? Wow, just 150%, easy. Where else you get 150% in a few days? Then yeah, thank you, Russ, for bringing this opportunity to us. But honestly, guys, I don't think anywhere else right now you would get that risk and reward profile. Now, looking at Palladium, I was telling you Palladium has bottom here. Nothing has changed. Again, this was giving me a clear swing failure pattern, or SFP. What is it? SFP is the attempt to break down, which was not confirmed, so we accepted back into the range. That's why it has been marked here. And I said it's likely bottom in Palladium, and since then, yes, we are retesting now the highs of the range. And I think based on how Palladium is confidently moving right now, the companies that are Palladium miners are gonna do really well. Of course, we had an amazing opportunity to add into Sibanye Stillwater that also played point of 3 to us, accumulation, manipulation, and now we're gonna have our distribution. So just from that company, I'm expecting to have somewhat around 70-80%. For major, it's a very good move, can happen in a matter of a couple of weeks. If you're looking for smaller Palladium companies for higher leverage, I would look at Valor. Maybe it's quite risky. Of course, clean air metals also quite risky, but you see, you know, if you're playing a little bit with DGen money, with a couple $1,000s, that's what I would do. If you're, of course, reallocating your retirement portfolio, I would rather stick to the basket. And in this case, also consider, for example, something like SIL, which is the global silver miner ETF, which not gonna give you those crazy moves, but it is also less risk to and less effort to manage. But keep in mind, SIL might do 40% from here, while my picked junior miners will do 150 to 250% in the same amount of time, simply because those companies are sometimes 50 to 150 million dollar market cap, and there is no option chain, there is no short interest to a large degree, and of course it also is extremely easy due to the lower volume to move those companies. Even sometimes myself, I become the victim of that. I am increasing my position by lower six digit, let's say 150,000, and that already moves the company price by 5%. And so I have to do it also in multiple beats and be careful about it. Now thinking of the big boys are still sleeping on that, obviously. Also big boys are unfortunately, due to their portfolio sizes, cannot get exposed to those juniors, because if you manage several $billion, that is normal, for a portfolio manager to manage a couple $1 billion. It's nothing crazy. I'm not talking about hundreds of billions of dollars, I'm talking about a few billions of dollars. So they already are not able to get exposed to that. So actually this is one of the rare things, and that's the reason why I joined the channel. I think there is still an opportunity for retail to make the difference in their living in the next few years. And with all that said, I am looking forward to have your questions. Please guys, like, subscribe, and put a comment. It really helps for more people to not sleep on that opportunity. That's the main reason I'm doing that. Please like and share if you find it useful. I think a lot of people still can make life-changing gains in the world of commodity miners. With all that said, much love, have a great weekend, and I see you soon. Bye.